traders at UBA say they expect the 111 billion naira Nigerian Treasury bills auction by the central bank to shape the mood at the Treasury bills markets. They also expect more buying interest and lower yields. Dumebi Udegbunam, a fixed income trader at UBA, joins us now to unpack the state of the markets. Dumebi, thank you so much for your time. Let's start by just hearing more about your expectations around that Treasury bill auction and how it's likely to impact the market.
Good afternoon, Wale. Thanks for having me. So at this auction, we're going to have about 111 billion being rolled over. If you look at the trend, the CBN has maintained stop rates for the past two auctions. The last time we saw a drop in stop rates was the two previous auctions where we saw it drop to 6.8, but the past two auctions we've seen an increase to 7.2 and was maintained the last auction 7.2. So we expect the rates to close around those levels, around 7, or probably we hinge up higher to about 7.5, but we expect the rates to close around that level. Basically, we've seen the quietness in the market. All market participants are all attentive at the auction to see whether they could win at higher and more attractive rates.
Right. We've had I think at least a week now to really appreciate the impact of the successful Eurobond issue. How is the market reading the implications of this for, first of all, the bond issuance calendar moving forward, and then yields in general?
Well, from last week where you had the Eurobond auction that was oversubscribed by about 400%, we saw an oversubscription of 12.1, but they were able to sell about 4 billion. Till now, this current week where we have a PMA auction, we've seen an uptick in yields generally in the market. However, the uncertainty still looms around the market. We are very unsure where the direction should be. And also system liquidity. As of yesterday, we are at a negative 40 billion in terms of system liquidity. So all these things put in place has more or less affected the activity of the market. So we've seen mixed sentiment. A lot of people selling to fund their liquidity obligations, while others buying on the back of filling customers' orders.
All right, let's talk about the Forex markets. And it seemed a bit volatile over the last few days, even though we have seen some more stability in the official market lately. But the central bank obviously continues to support the market as it intervenes. Do you think that we're going to see even more intervention now that those external reserves have been beefed up by the borrowings that we've seen from the federal government recently?
Okay, so basically we've seen a stability in the market. As of last week after the Eurobond auction, due to sentiment, we saw the Naira appreciate a bit. However, due to demand pressure, we've seen that drop down. Right now, we've seen it in the I&A window at 414 levels right now compared to where it was the previous week at 4113. So this is just due to demand pressure. However, the CBN has made it an obligation to further fund the market with FX, so we expect to see a stable Naira going forward to enter Q4.
Right, but looking further ahead though, and especially given what I think many are suggesting about the outlook for the oil price, unfortunately, and we're going to get to that later on the show, we haven't seen Nigeria being able to beef up its production. But an oil price at $80 or higher, it really generally should mean that the currency should be stable. How supportive do you think a high oil price is for the currency right now?
Yeah, so we've seen an upward move in oil prices. If you do a month-to-month analysis, we've gone from, let's say, from July, August, September, we've seen about a 3.5% increase in oil prices from 70, 75, 77, and currently trading at 78.79. So which is good for us. However, we should also look at the other side, which is us, how much we spend in terms of payment for subsidy on that aspect. So yes, that has helped increase our foreign reserves and also the borrowing and the SDR. So we've seen an uptick in the foreign reserves, and also we tend to see a balance in that aspect of the market. In terms of oil production, Nigeria is actually tied to the OPEC, which they've actually claimed to say that they're going to increase the production because we are poised towards the production side more or less than the selling side. So this will also help. We've not been able to produce our full capacity for over like 6 months now. So with this increase in production by the OPEC, this in turn is all positive news for us, and this also leads to more foreign exchange in the markets.